What's going on, guys? It's Christian from Stock Hours with another video, and today's topic is going to be about how to adjust to the changing market conditions. So if you guys have been trading for quite some time, you would be able to identify that sometimes your strategy might be very hot. You might have a very high win rate for a couple months, and then it might slow down because typically it's because the market conditions are changing. So it doesn't mean to entirely change your strategy. You just make a couple different tweaks. So for me as a breakout trader, I obviously do best when the market is very volatile, not consolidating. But obviously, the market is not always moving straight up or straight down. So when we are consolidating, I have to adjust my strategy just a little bit. So some examples of what I do personally: if we're consolidating, we're flat for a while. Let's say we're flat for a month, 2 months, 3 months. I might just not have the biggest profit target on certain trades. So when I'm looking at a breakout, I might just be looking for the quick scalp of the break, not looking for a longer hold. Just for example of one thing that I do when I notice that the market conditions are slightly changing. So some reasons why the market conditions may change are due to the overall just technicals of what the chart is telling you. We might be reaching an area where it's going to be hard to get more continuation, so we might slow down, consolidate for a little bit. If you're a range trader, obviously if we start breaking out of the range, the technicals are showing you that things are going to be changing. So you might have to adjust your strategy at that point. Another reason why market conditions may change, one of the biggest reasons, to be honest, is going to be based off of news. So it could be economic news, political news, really any news that's going to affect the economy will affect how the market moves. So for example, we have the presidential election coming up. That's going to have an impact on the market depending what happens. We'll see. But when there's no presidential election, obviously there's nothing that's going to change dramatically. So what recently has been happening is whenever Federal Chairman Jerome Powell speaks, that has a big impact on the market. So leading up to that, market participants and big money are waiting to see, is he going to drop rates, is he going to increase rates? So we might be a little flat, see what happens, then they make the decision based off of that. So that's just a couple examples of how news may affect the market conditions for just a little bit. Now another factor for individual stocks, not necessarily the S&P 500, maybe a little bit, are going to be earnings. So when a stock has earnings, people are waiting to see what the earnings numbers are going to be to make the decision on what they want to do with their position with that company. So if a company is expected to have very good earnings, that's going to affect the stock's movement leading up to that earnings. Obviously, whatever happens with the earnings release is going to, again, help people inform their decision of if they want to stay with the position they have, increase their position in that company, or sell it off. So earnings are going to be a big factor to the changing market conditions for that specific stock, sometimes for the entire sector. And also the time of year and the business cycle can also affect the market conditions for certain stocks and certain sectors. So certain sectors are cyclical. So at a certain quarter, they might have very good earnings. The rest of the year, they might just be flat. So that could affect how that stock plays out throughout the year. It might have one hot quarter. The rest of the year is just slow. So depending on what type of trader you are, you have to keep that in mind so that you can capitalize on the stock the correct way and not, do good for 3 quarters. Now the 1 quarter is just totally blows your account. So you want to make sure you keep that in mind. So there's a couple different market types to look out for. Depending on your strategy, you're going to gravitate towards one over the other. So certain market types are going to be choppy markets. So if you just look at my screen, Choppy markets are basically when the market is flat for a while. So here's another example here. The market's just flat for a little bit. So when you look at how long we were trading at basically the same price for, this is from May 6th all the way to June 11th. So a little over a month. We're trading in basically about the same range. We did grind up a little bit, but for the most part, we're basically flat for over a month. So that's going to be an example of a choppy market. Now, on the flip side, something like this, the market's obviously grinding up. It's going to be a trendy market. This one lasted from May 31st to June 20th. So just about 3 weeks. We're just trending up slowly and steadily. This is honestly the market condition that I like the most, I would say, because you have enough time for stocks to set up, plus you have a general direction of what the market's doing, which is it's going up. Now another example, I don't know if I'll be able to find one, but it's going to be called a parabolic market. So I guess if I do, wow, COVID was actually a while ago. Let's go 5 years. This is going to be an example of something parabolic, where we move in extreme ranges in a very short amount of time. That's going to be an example of something parabolic. Obviously, this one's to the downside, but imagine it to the upside. Same idea. This is honestly pretty strong. So you can, depending who you ask, this might be also parabolic in a way. Now, I guess to go with that, the last type is going to be fearful. So similar to parabolic, it's just reverse. They're kind of the same thing. So like I said, with the different market conditions, some things that I personally change in my trading is just knowing what the market condition is going to tell you how to execute your trades. So since I'm a breakout trader, in a choppy market, I'm not going to be looking for the biggest move. I'll just be looking for the high probability breakout scalp. When the stock breaks, I'll just sell it right there. Versus sometimes when I notice the market is trending or even parabolic, I might get in at whatever breakout level. Instead of selling once the stock breaks, I'm going to hold to the next profit target to look for a little bit more, because that's what the market is providing you. So if you see that you can capitalize on a bigger move consistently based off of the market conditions, then go for it. But if the market conditions are telling you to sell early, then that's what you have to do if you want to maintain a high win rate and maintain consistency. So even though, yes, your strategy might work 1 week, the next week you might have to adjust it because of the changing market. So hopefully you guys like this video, and let me know if you've noticed throughout your trading career that the market conditions do change over time. It's usually a cyclical thing. So a couple months is hot for you, a couple months might be slower. Doesn't mean it's red, it's just, not as crazy of a month. So let me know how you guys have noticed this and how you've executed on this. So hopefully you guys like the video. Make sure you leave a like and comment down below. Peace.